Ajay Srivastava, CEO of Dimensions Consulting, now joins in. Ajay, hi, good morning. You get a sense that this is that bull market correction that everyone was looking for, or would this also be a shallow affair and the market would be back to all-time highs in no time, just like it has panned out all through the last 7 or 8 months?
I think one has to look at it not from a domestic perspective, Anuj. We always look at from a global perspective where the markets are going, because we may be in a minority at this point of time or earlier to believe that the whole rally was a relief rally plus something backed on a global equity upsurge. So if you see the global equity markets reacting, I don't think India can stay out of it. If it's going to be severe tightening in the US, India will get hurt accordingly. And number three is that domestic factors, they are not giving you any major impetus to go buy in the market. Nothing happening on the ground in the economy which tells you that you should go buy the stories. The reason you're buying even at these valuations, post-corrected valuations, because of the huge global liquidity upsurge giving a kick to the global equity markets. No other reason justifies barring select sectors which you go and buy in this kind of a market at these valuations. So no, the answer is that if you see new highs, it's going to be backed by global flows. If you see the new lows perhaps after some more time, it's going to be because of the lack of domestic initiatives. But clearly, one thing is out very clearly, is that the mainline stocks, the good quality stocks are going to have a good time. The bad quality, the so-called mid-cap stories are not going to get anything close to the return that people are looking at.
So Ajay, are you getting a sense that if there is a continuous FI selling, for example, we saw for the last 4 or 5 days, in that case, the downside for this market could be deep? I mean, what could be the worst case scenario in the current correction?
See, I don't think so it's going to be that deep as Anuj we're talking about, unless something drastic happens in the global markets. The selling has been, if at all, I would say a muted selling of a kind compared to the money which came in, and when the money has gone out, it's really nothing to talk about. These are normal corrections which keep happening. I think the real issue is that will India be able to come up to the expectations what the global community is expecting? That's one. So will there be now a shift to say that there are good domestic factors to start buying into the market, more than global liquidity, more than the first flush which has come in with the euphoria, etc. And that's the trigger. Because if there is no such initiative in the next 6 to 9 months, a lot of despondency will take place. A lot of people will try to reallocate back and say, listen, it's the same old story all over again. If we see substantial action, yes, I don't think lows will become. But if no action happens on the front that we've been talking about policy, and we have seen no action so far in the last, say, 3 to 4 months, I think very little has been seen on the ground, no matter what is on the televisions. So that would see that, really speaking, that market has to then travel down from these valuations to more realistic valuation, post the numbers of Q2 and Q3 numbers. So, really speaking, one can't take a call today, but the call will come that as soon as the government comes up with something concrete and we see some action on the ground. And of course, RBI can help a lot in that, but let's hope it does.
Hi Ajay, good morning. Since the last time we spoke, we've had the Supreme Court verdict on the coal block we've had the Supreme Court verdict on the coal block deallocation. And stocks like a Hindalco as well as JSPL have corrected a fair bit. Are they still in a void?
The point is, if you look at the coal verdict, I think it showed absolute lack of any kind of government initiative with the Supreme Court to say, how do we safeguard the assets on the ground? We are not very clear the repercussions on the banks, on these companies, the penalties, and all kind of stuff which is going to float in the next 3 to 4 months. This is what I was saying, that you're saying buy into the sector, but I'm saying there is so much uncertainty in the sector today. One doesn't know where it's going to end up. We're back to nationalization era at this point of time. And, last coal block auctions didn't get a very good response. So one doesn't know where the sector will come. Hindalco, of course, is not really a coal block story. I think it's a more novelist story now than a coal block story. So you would buy Hindalco for 2 reasons, I would say. Novelist turnaround, expansion of capacity, and the copper story coming out in Hindalco. I don't think it's too much of a coal block situation for Hindalco at least.
Okay, let me come to the earnings season then. You do not think that will provide a trigger?
I think barring IT and pharma, I don't think it will be a trigger at all. I think it will be a disappointing quarter. Banks will disappoint. I think quite a bit of industry will disappoint. The only ones which will give spectacular results, I believe, will be the pharma and IT sector. FMCG will be very, very muted, in the context of what we're talking about. So barring these 2 sectors, I think the results are going to be subpar in this quarter. Purely backed, again, I'm saying, on the fact that the retail buying is not taking shape. The bank loan portfolios are not growing in a healthy manner. NPAs are going to rise. So, all in all, we are looking at a more stagnating economy than a vigorous economy. Yeah, you can say green shoots and all those things, but we're talking of growth. We're not talking of green shoots. And growth is not there at this point in time on the ground.
So, Ajay, let's talk about 3 or 4 names, the market leaders which have corrected 8 to 10% now. There's ICICI Bank that's corrected about 10%. ONGC has corrected close to 10%, and Larsen & Toubro is also close to 9% lower from recent highs. Would you have courage to buy these 3 names now, given the fact that there are some headwinds, and as you said, earnings season could throw some negative surprises?
See, I think, if you look at the banking sector, I would still position that Axis Bank perhaps would be a better buy than ICICI Bank at this point of time in relative to the performance, relative to the valuations, etc. So you may not want to take, if you really want to be in banking sector, take out ICICI Bank and maybe substitute with Axis Bank, should give you a better return than ICICI. I think Axis also should have fallen a little more than ICICI, if I'm not wrong, in the context of 9 to 10% you're talking about. If you look at L&T, now L&T is a stock, unfortunately, Anuj, if you really are playing the infra story, the India story, you have to have in a portfolio. It's not a question of valuation, it's a question of a long-term keepsake, that what do you buy in otherwise? If you don't buy L&T, that means you cannot buy an India story at all in the infra side. So L&T, I would still say, is a buy on dips kind of a situation at this point in time. Axis Bank would be better on this point. ONGC. Now, I would still believe that with the falling oil prices, oil marketing companies represent a much better bet on valuation than ONGC. And given the oil exploration policy, which is not very clear, what's going to happen to gas pricing, not very clear, I would still say I would put the money in oil marketing companies, which have also seen about 20% correction or thereabouts, or maybe 15%. Indeed. I would rather put the money there than ONGC at this point.
Okay. So, you said you'd avoid mid-caps for now. Would that include names like, say, a TVS Motor or an Ashok Leyland or an Arvind, which have doubled this year, in certain cases gone up 200% this year?
I think they wouldn't like them to be called mid-cap stories, Anuj, because I think all the companies you named have reasonable turnover at this point of time to be classified, if not aspiring, large cap, then maybe a mid-cap story. So I won't club them into the mid-cap story. Ashok Leyland I never buy. I think it's the most mediocre company one I've ever seen in the last 10 years. One would never want to buy a mediocre story unless something management changes or promoter changes or something happens there. So I don't think that's a buy. TVS has done a remarkably good job in terms of getting back their market share, but in a competitive market, you don't want to be there. You want to be with the big guys who've shown consistent growth and export story. So if you really want to allocate some money, you would allocate to maybe a Hero Honda at this point of time, given that Bajaj is floundering a little bit or so on and so forth. So yes, I would still say that your mainline top leaders are going to give you better returns even at these valuations compared to the smaller mid-cap stories. I think smaller mid-cap stories have seen a correction. They'll see further corrections.
Ajay, you said that one cannot not have L&T in their portfolio. Would you extend the same argument for, its other peers like a BHEL or smaller ones like Thermax, Voltas, or anything in the infrastructure basket? Because they've corrected so much. So are the valuations now looking attractive for, for you, to enter?
BHEL, no way. No way, BHEL, absolutely. I think that's a story you want to keep away. See, L&T, why I say L&T is, it's not a story of just infrastructure. It's a story of an export player who's doing a good job in the Middle East. It's a story about the largest defense contractor in the country. It's a story about the company whose sum of parts is far greater than the whole. Its only hindering fact is the old aging management team which needs to go. That's all. The share price will double. As simple as that. I don't see share price doubling for BHEL by any standards, any chance. Voltas, yes and no perhaps, but it's in a very limited category. So you really want to have a good play on 5 or 6 sectors of the economy, including defense, you must go to L&T. It's a good place to be for 5 sectors investment through one company.
What about Infosys? You said that you expect good earnings from IT this quarter. Would you bet on Infosys ahead of its earnings?
Okay, we are long in Infosys. Yes, I think, I'm not sure whether the result will be so attractive at this point of time, but I'm quite sure that the trajectory is going to be very attractive. You've got a CEO who's consumer-centric, customer-centric, sitting in the US. You look at the Cognizant story, you'll get some ideas what he should expect from Infosys. So I think even though the results could be kind of, I would say flat to a little bit of a positive bias, but I still believe that it's going to give the best returns in the IT sector after Tech Mahindra.
Ajay, is it time to buy, say, something like JP Associates just for a bit of a punt? Or would you say that it's a falling knife? It's down 52% this year, and the story is getting murkier now.
Listen, Anuj, you want fireworks, you go buy fireworks for Diwali. Why do you want to use your money for this dog? See, Anuj, we have been saying for a long time that with a debt of, who gave him the debt of 70,000 crores on an equity of 8,000 crores? Every bank application said debt equity is 2:1. Who gave it to him? How can he repay 60,000 crores? His assets are not worth 60,000 crores now, or everybody can see it. Even if he sells everything, he won't get 60,000 crores to pay the debt, forget the equity. So, even at 30 rupees or 38 rupees or 30 rupees or thereabouts, you're in the high risk zone. Yes, you can speculate, but I would still prefer good quality fireworks for Diwali than put the money in JP.
What about GSW Energy? Since we're on the topic of JP Group, GSW Energy has corrected for 3 days in a row post the deal.
See, again, I don't know the deal is through, not through. You can correct me that is it already in the bank or is it something going to happen, fall across in the last page. But I think, again, when you acquire such a large asset, it's obvious that with the debt burden coming in, equity valuation will take a knock. They need to reorganize the debt. So equity returns are going to be muted for a long time till clarity comes on a lot of issues with the JP Power. So I'm not sure it's a good equity play at this point of time, but post a good quality, healthy correction, post clarity on the merger, I think it will be an excellent play in the power sector, if you ask me.
Okay. Ajay, final question from my end. What about these pharma names like Cipla, Lupin, Sun Pharma, which have had a vertical run, but now, valuations might be a problem. The market, of course, is willing to pay premium to high quality, but is the current premium justified on pharma names?
Of course, of course. Anuj, I think it's a heresy to say, of course, you will say that the pharma companies are overpriced, but I would say to you that this potential of this company is so enormous that we can't even fathom what they will look like 5 years hence. That's one. Number two is the stability of earnings. Barring all US FDA kind of an accident, these companies are on a difficult, absolute clear trajectory path. If you look at Sun Pharma, post-Ranbaxy merger, it's going to be a giant in the world. It's shown this willingness to acquire companies, shown a global platform. Lupin has done a remarkable job in addressing the margins and coming to the US market. So these are kind of stories which you must have in a portfolio if you're an investment story, if you want to build a portfolio. They may not give you spectacular returns every second morning, but I think if you look for a 5-year or 3-year perspective, 25% return compounded is, I think, kind of assured in these names, even at these valuations. You can wait for correction, but that's all right. But if you want to step into it, 25% compounded year on year for 3 years is what you should look for. Nothing more, but this 25 is a very good number.
Let me ask you about two stocks that are in news today. Different sectors. One is HDL, where the promoters have revoked all the pledged shares. And secondly, on the pharmaceutical subject, Strides Arcolab post the merger with Shasun.
See, okay. HDL, I don't know too much about it to answer the question, but I will still believe that the real estate sector from our perspective in the North India is no-go, absolutely. Maybe in the West, it's kind of coming together, and HDL has been remarkable in terms of its ability to survive and fund itself. I think let's give it to the promoters. They've done a very good job through all the bad news they had to keep the company going. So maybe there is something there which I don't know enough about. So I would still say promoter getting the shares out of the pledge is always a great positive for the company. It means strength is coming back in the company and the promoters. What is the background? I don't know, but it's a great positive sign. Okay, so, sorry, the next one you said HDL and second one?
Strides Arcolab.
Strides Arcolab. See, Strides is a good quality company, let's understand this, and it has got a good growth story, and it has not been afraid to divest asset like it did in Australia, etc., to get the right value for its asset at the right time. So it's a great story out there. Shasun was, I think, in my belief, a greatly undervalued asset, which picked up valuation in the last 6 to 9 months. Maybe someone can look and say the deal was now offing and therefore the share price went up. But it's been a kind of a pharma dog for about 8 to 10 years, and then it picked up steam only in the last 12 to 18 months. That's when the valuation kicker came in for Shasun. So I would still believe that even at the ratio of 5:1, it's a good, attractive buy for Strides. And at some point of time, Stride itself will become, when the merger is more clearer, Stride will be a good attractive buy given the size of the company. Shasun is being bought cheap, let me tell you this much. At this valuation, Shasun is a good asset being bought cheap by Strides, and they're not paying cash for it. So I think it's a great story of a merger. Again, it's making of a giant coming together, and you want to be early part of it. You may wait for a correction a little bit, but yes, go and buy it.
Okay, didn't get a chance to ask you about Maruti, Ajay, because that's now hitting a market cap of 90,000 crores, 3,000 rupees on that one. It was just about, less than a year back that we were talking about all the problems of, the concerns of minority shareholders and what was happening with Suzuki's plant. The stock was at 1,600 then and 3,000 now. At current levels, what's the call in Maruti?
Yeah, the call is good. The call is, if you have this thing shareholding, you keep it. If you don't have it, I would not say it's a kind of screaming buy, because the return should not be expected to be more than maybe 15-20% year on year. But the good part is that the huge portfolio of petrol cars now come into the play. The new cars are attracting attention, I think. And, what the investors said was correct to Maruti on the plant in the Gujarat. I think that's the correct thing, and they've gone for voting for it, etc. So they've done the right things about it. But the story out there again is systematically they adhere to the strategic plan of being in the economy, the mid-price segment, and they cater to the market, and one of the best service networks. So if you, again, as I said, you want to buy India story in auto space, you cannot start without being Maruti in a portfolio, no matter, because there's no other car company there. You have Tata Motors, which is kind of a dog. Then you got all the other Japanese and Koreans who are not listed in India. So if you want to buy an auto story, I think Maruti is the only one to buy into. So it's not a decision to take this or that. I think the decision, you want to be in the sector, Maruti has to be a buy. Valuation is stretched, but I think it'll give you a return of 15-20% across a year.
One final question, Ajay. The market action suggests that midcaps is the place to be. Give us a few midcaps that you would bet on even after the rally that they've seen.
See, okay, I don't bet on midcaps, to be honest. I don't think I have very many midcaps in my portfolio, barring one odd power stock, one odd pharma stock. To be honest, actually, in the last 2 months or 3 months, we have really not built up anything in the portfolio. I've kind of divested most of it. So I'm not sure whether I am here right person to recommend midcap stories. I'm on the one who's saying I don't like midcaps at all. I don't want to get on. There could be an odd growth story. Leave aside pharma and technology. Leave aside Oracle for financial services. That's it's a good quality stock you want to buy. You should buy, and I would say midcap stories are the pharma stories, what is called the MNC pharma stories. If you look at it, the government regulation to take away the pricing guidelines, to say that they will under price control lots of drugs, means a very strong positive for MNC pharma companies. All of them come in the mid-cap. Go buy and keep it in the portfolio. Believe me, they'll give you substantial returns. Same, I would say, for the MNC companies, which are mid-cap in the consumer space. So I would say, if you're looking at the mid-cap story, pharma, MNC would be the first place you want to put your money today in this market.